Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. How would you like to find a super reliable trading formation? Wouldn't we all like that? And yet it seems like we're always struggling and never able to find these types of formations. Well, I have good news for you. There is actually such a formation. It's a very common formation. It's actually one that we've gone over before. It's one that I reference time and again, and not always in the same terminology, but it is kind of my go-to formation. The best thing about this particular formation is it repeats itself time and again, and it does it in all time frames. It doesn't matter whether you're trading intraday or end of day. It's just a great formation to know. Okay. What is this fantastic formation that I'm telling you about? Well, quite simply, it is a head and shoulders style formation. Some people refer to it as a head and shoulders. Some people refer to it as an M or W, and some people will shorten it to a 1, 2, 3 or ABC type formation. Let's take a look at what this formation looks like and why it is so powerful. The head and shoulders formation, as the name suggests, looks like a head and shoulders. So what you have is you have the market making a swing high. It puts in a higher swing high and then a lower swing high. This is in an uptrending market. So here, this is your left shoulder, this is your head, and this is your right shoulder. What is this telling you? Well, basically it's telling you that the market is breaking down, that the trend is breaking down, and it's no longer able to hold on to that trend. Traditionally, traders will start to sell on a breakout of this trend line between the left shoulder and the right shoulder, but it isn't really that important. I usually look for a confirmation of support or resistance before I sell. Of course, you could just sell below the low there. There's several different entry strategies, but the important thing to note is that you are seeing a breakdown in the trend. So when you see this happen and all of a sudden your system is generating buy signals, well, maybe you're going to be a little bit more suspicious about buying the market, or perhaps better yet, maybe you're going to set up for the possible failure and the opportunity to sell. So this is a head and shoulders top, or what they would call a W, because it looks like a W. Let's take a look at a head and shoulders bottom. Well, fortunately, just a little ways away here, we have the market swinging the other way. So here we have a swing low. It goes and makes a new swing low, comes back, and makes another swing low, not as low as this one here. So once again, you have the left shoulder, you have the head, and you have the right shoulder. So this is what is known as an inverse head and shoulders, or an M, because it looks like the letter M. A little bit of a tip off here that this market was actually breaking down was that this swing high broke this swing high here. And again, the idea is that you're going to enter on a break above the pivot, and you can see that there's some pretty nice follow through. Now, why is this important? Well, it's important because it gives you a very early indication as to what is happening with the trend. When the trend is breaking down like this, you become a little bit more cautious on your sells, at least until you get down here where the market might be looking to make a new low. Same thing with the buys. You would be a little cautious taking a buy signal after you have this type of formation setting up, because it looks like the trend is falling apart. What's very interesting about these types of formations is that they repeat themselves time and again within the trend itself. So you have a constant way of monitoring the health of the trend. So here you can see we're getting some sort of choppiness going on. So right away I would be alerted to a possible head and shoulders type formation developing. And I will have noticed that the market actually broke down here and made a new low, a lower low. So if it starts to pivot here, I might start to get a little bit more bearish. All right, now you can see I wasn't actually selling or anything, but the market gave me another signal here and continued higher. So I know the trend is still intact, and what actually happens is we get the reverse scenario. So our W turns into an M, and the market continues higher from there. And this will cycle time and again. You'll always get these little swings, and when you get them, you'll know that you need to be on the alert for the possibility of a sell. So that is your head and shoulders M or W or 1, 2, 3 formation, however you want to refer to it, but it is a very, very powerful formation, and definitely one that you need to know about. Now, I mentioned that it works really well. It works in all time frames and all charting styles, but it works especially well with the mean Renko bars. This is a chart, a crude oil chart, that I'm displaying with mean Renko bars. Now, these mean Renko bars are actually unique to Indicator Warehouse, but they do a fantastic job of condensing the price action, eliminating a lot of noise, and clearly showing you where the support and the resistance levels are occurring. What makes these mean Renko bars unique is that they take all the advantages of a Renko bar, so they have all the noise reducing, price condensing advantages of Renko bars, but they also display like candlestick charts, so you can actually see the price action as it is building. You can follow this link to find out a little bit more about them if you're interested, but like I said, you can see this type of formation developing on time-based charts, on tick charts, on volume charts, but I find it's easiest to recognize with the mean Renko bar. And that is this week's Tricks of the Trade.